Hey guys, Mike here. Hope everybody had a great Labor Day weekend, and we're going to throw a bunch of charts at you talking about what we are going into for seasonality, and it might fool you a little bit, and you might be a little surprised by what you're about to see. We'll also talk about, obviously, we have a probability of rate cuts coming up. We're going to talk about that and what that means for bonds and things of that nature and TLT, and then we'll go into the indexes and a few stock charts as well as earnings and some big economic data coming out, some events we'll talk about that could absolutely move the markets. But as you can see, we have now entered the worst month, what is typically the worst month of the year for stocks for sure when it comes to seasonality wise. But it's not just about the whole month. We're going to break that down, of course, you can see. But what you really want to see is this seasonality play out for September, October, because November, that's by far the best. The year-end rally where all the hedge fund managers try to get the year-end bonuses, make everything look great, woo-hoo-hoo. That's what you want to see and look forward to. Now, when it comes to September, it's usually the second half of September that's the worst. Okay, you can see it's like the worst 2 weeks of the year for stocks normally, not the first half. Okay, now when you go over here, I'll give you a little more data. We got possibility of rate cuts this month. This shows you 12 months after the first rate cut. And you can see the only two negatives are the dot-com bubble and the 2008 crash. Everything else 12 months later, going way back, look pretty good. That might be very surprising. But again, that's if we don't hit some crazy event like a dot-com bubble or the great financial crisis where banks almost collapsed on you. Tends not to be too bad. So that's what we got to, kind of wait and see. That's what we got to do. That's why you see headlines like this coming out on Friday, though. Option trader spends $9 million betting on September volatility spike. Nah, I mean, it's a pretty good bet, like 350,000 contracts. I mean, I think he paid 25 cents a pop for them. And so obviously if it spikes, he's going to win big. If it doesn't, then I guess his money goes to nothing. And, when you look at this right here, one of the things that could cause this, I think it's what this person's betting on, is the unemployment rate comes out this week. Again, we'll get into all the events that are going to happen this week, but they're actually forecasting it to go down. If you look at the last 4 times, it's come in over projections. We hadn't come in under since April of this year when it was 3.9 versus 3.8. So you can imagine if it comes in under, all of a sudden they go, woohoo, recession called off, market's going to love it. See you later. If it comes in over at 4.4, 4.5, oh boy, we might need to buckle up for that one, okay? Could be a rough first half of September if that happens. Now, the other thing, what's uninverting? Like the yield curve, it's right at the zero line. Again, it's been there before and it got rejected back down. But again, if this goes across the zero line, starts steepening up, then the markets is kind of on a watch to go, okay, normally things don't go well when this thing uninverts. So let's see what happens. This is TLT, for example, which is a pretty popular ETF for bonds. I'm going to change it to where you can actually see the color of this to see what happens when it actually goes across the zero line and starts steepening. TLT normally gains because what happens is once it starts uninverting, usually that's when the Fed is going to start cutting rates anyway. And so, of course, it has an inverse relationship with rates. And so you can see when it uninverts here. Again, TLT is not like NVDA. It's not going to go up 40, 50% unless there's actually a recession. Like if there's a real recession, that's when you get a big old spike up in it. But normally you're talking about you're happy if you get, 9, 10% back. But normally it will go up. And usually they do the first rate cut, though. It actually dips a lot of times. So watch this one between like 92, 97 bucks, somewhere in there. And, we'll see what happens. I think even when we were at 2% rates the last time, it was like between 120 and 140. And right now it's sitting, I believe, at 96, 97. And it doesn't go back for the dot-com bubble, so I can't tell you what's going to happen. But this is the popular one everybody's talking about. So watch. The yield curve is going to start getting a lot of attention, right, from here on out. You're going to see charts of it every day on Twitter and everywhere else. Now, when you look at bond performance, when you really look at this, it's almost like two different stories. Pre-19, 88, man, you can get some really great returns, right? Really great returns. And then after that, it's okay. I mean, average is 10%. I take the average of all of those, but truthfully, it's not even 10%. When you go from even 1989 on right here, and we'll zoom in, I mean, the average 5%, really. And I mean, again, TLT is traded on the stock market, so of course sentiment can drive that thing through the roof, but this is just bonds. But that's kind of gone to the wayside now. So when you look over here at futures, what's happening now, what we talked about on Thursday's video was very simple. When we said we were getting wedged in, right, they break, and this can break either way. Well, it broke up, okay, starting Sunday night. And it was only open like half a day, I believe, on Monday. And so they pushed it above it. So now we're looking, and we talked about those equal highs, right? Just wanting to get taken out. You know, different versions of equal highs. You had those. Now those have been taken out. Then the ones above, you can see, are still sitting there wanting to get taken out. Right now, as I'm recording this, they're selling it down a little bit. But I'll actually go ahead and label these out for you so you can see them. But, you know, 1, 2, 3, 4 of them right there were left behind. And so I'll be surprised at some point in time, whether it's tomorrow, the next day, whatever, these don't get taken out, because right above this, you know, you have more liquidity to grab right here. So we're going to watch that. And so looking at where this can go, you know, you can see it coming down to the night, bouncing off this right here, coming up, and then maybe by morning, maybe even tomorrow afternoon, breaking above these equal highs right here, trying to grab that liquidity, and then obviously coming back down. So you can see that move for sure. Again, we're going to just follow the trend, follow the action, look to see where liquidity is going to be. So you can see that, I mean, 19,750 between 19,800 somewhere in there on NQ. And then, of course, if we take that away, you can see right here, those lines could end up becoming support for sure. And those trend lines you can see, which we're going to actually extend those up, are going to end up being support as well. Again, I normally don't use trend lines. These will probably be gone by the next time I even do a video. We'll see if they actually hit or not. But when you look at it, it was resistance, obviously broke through it. This right here was support on the way up. So that should be support on the way down as well. And so you can definitely see this going up versus down right now unless something happens. And the reason why I say that when you actually look over here at a higher time frame is because don't be surprised if this actually ends up coming all the way up to here to between like 20,000, 20,400 to grab this liquidity. And then what you're looking for is a bull trap right here, and then start to sell us back down the second half of September. All right, so that'll cover kind of the first 2 weeks and kind of play around with seasonality. Again, we're going to watch this. We're not going to predict this. We're just going to watch the levels and everything, see which one starts breaking, breaks the upside, downside, all that stuff. I'm just telling you what could possibly happen here and to be on the lookout for. So if you break that level, which I'm about to mark out right here, then yes, you're probably looking at way more downside coming up in the end of September and early October. So watch that right there to break around like 19,526, I believe it is a level. And so, you know, just putting it out there for you, keep it on your radar. This is what could happen. So if you see us going up into that liquidity area, let's see if we start to break down. And one reason is when you start to move over and you go into the S&P or the SPY, which some people like for me to chart, you know, we're sitting right there. There's all-time highs. We're literally 0.3% away from all-time highs. NQ and QQQ have been lagging like crazy because money's been rolling into all those other sectors I showed you that have been reaching all-time highs. And when you reach all-time highs, guess what? You have no resistance. Now, what we got to pay attention to is this happens. Does it try to be a double top? Is that what happens here? Okay, if not, then if we break to the all-time high, then we got to start figuring out where it can go. And if you're looking like the 1.618 Fibonacci level, that's around like between like 570, 590, somewhere in that range right there. So don't be surprised if this thing starts getting a bid and pushing up real heavy over the next 2 weeks. And this will depend on economic data. If the recessionary fears start to go to the wayside because you get a lower unemployment rate, job numbers start to come in better, and we're getting a rate cut, then you go, okay. But normally on the first rate cut, which will come in the second half, I believe, of the month, you normally get a 5% drop on average on the first rate cut. So it kind of seems to be working out to move up the first 2 weeks, and then it makes sense to drop right in the second half. But again, we'll see. I mean, that's seasonality. Whether you're talking about presidential elections or anything else, that's what it is, right? Now the Qs, again, we're above the 5-day moving average. We're setting above the 50 moving average. So, you know, that's a good thing. It actually closed back above these right here. Again, this is lagging the SPY. Okay, and you got that gap above. The SPY already filled this gap. They have no more gaps to fill on the way up. All it has to do is set all-time highs. And so, again, you need this 5-day to start curling up right here. It's got to stay above those moving averages. And Microsoft and Apple and NVDA and Tesla and Google and all that stuff have to start catching bids, right? That's what needs to happen. Because it is, you know, the SPY is 0.3 below. This one's like 5% below. And so big difference, a lot of rotation been going into other names, a lot going into defensive areas, right? And then when we look over here, really looking out long view, right, on the weekly, that long-term trend line, that's what you want to watch, still intact. That breaks, then you're going to see a lot more downside. But that's still intact since the beginning of 2023. and this market really started to move, okay? Now, looking at some of the big boys, Microsoft, we talked about this, it's curling, it's above its 5-day moving average. It also did what? It was on its 200. The last time we talked about it, it got a bounce. It did not lose its 200 moving average, which is critical. It rarely touches its 200 moving average. Okay, this is the second time when it got below it before, regained it. Now what's happening? Now you're going to have a lot of resistance coming up right there. That's a lot of confluence in that trend line, right? You have a horizontal trend line, an ascending trend line, which has been support since, I believe, the beginning of 2023. Yeah, so year and 9 months, it was support. Now it's going to be resistance with the 50 moving average. So it's got to get through the 100, and then it's got to go up and hit like basically all this at one time if we start to move this first 2 weeks and get through that, right? That would be a great rejection point, by the way. But if it gets through it, it'll be explosive for Microsoft. Now, obviously, this is the now, what, second heaviest weighted? Because it has the second market cap. Now that NVDA sold off, I believe. I could be wrong on that. Maybe the third biggest market cap. So pay attention to that. And then you got, obviously, NVIDIA, which if it starts to get a bid, you would expect all the other semiconductors to finally get a bid. Okay, it is stuck down between the 50 and the 21 EMA, which now are right at the same spot and below that descending trend line. So if it breaks through all three of those, gets a bid, call sweep, start rolling in, then you can see a big move up, right? But it's also a great rejection point. Right? It held the shaded area twice, 2 days in a row, but it is also a great rejection point. So it's really a kind of a wait and see, like what happens here. All right, and so if I start seeing call sweeps roll in, this breaks above this, and usually what you'll see is you'll see a gap up above it. What will happen, and if that happens, you kind of know, okay, NVIDIA might be getting a real bid here, and we might finally start to move back up. Do I expect some crazy numbers? Not really, not because of seasonality, but we'll see. So it's a wait and see game. Tesla's another one. I'm gonna wait to see in call sweeps. It's stuck between the 200 and the 50 right now. It held the 200. Okay, it held the shaded area right now. Again, below the descending trend line. It did in the short term here. Set a low, higher high, higher and low. So in the short term trend line, you go, okay, we're moving since beginning of August. You go back over here though, and you go, it's kind of rough. Okay, it's kind of rough. So we're going to have to see if it can finally get to that white line, which is 235. If we get there, I would definitely expect a rejection at that point in time. But we will respect it because if it gets up there, it's a higher high, right? That will be an upward trend. So until it breaks back down and breaks that upward trend, you just expect more upside. But if it breaks the upward trend, obviously we're going down, right? We're just going to keep, the trend is your friend. That's what we're going to keep right now. So in the shorter term trend, we supposedly might be heading up right there. Just pay attention to it. Now, looking over here at Visa, for example, right? This one right here was in this bull flag, broke out last week, okay? And so, because this is when the recessionary fear started to come down, they were like, oh, okay, yeah, maybe Visa's a good one to go into. They've been selling it down since March, right? And I was kind of hoping we get down here and come down into the support and then get a bounce at the bottom of that channel. We didn't get it. Didn't think we would. I think we talked about this a few weeks ago, but we'll see if it's a false breakout or a true breakout on that one. So pay attention to that. And then when you look at earnings, you're going to have a lot of retailers. No big names though, right? You can see Zscaler on Tuesday. Then you have Dick's, Hormel, Dollar Tree. We'll see if they do better than Dollar General, which has been massacred. C3AI, Hewlett Packard, ChargePoint. I still can't believe it's in business, but they are. Thursday you'll get Neo. And the big one, Broadcom, which I think Nancy Pelosi has like June 2025 calls on. UiPath, DocuSign, and then Big Lots, another one that might be in trouble. We'll see on Friday. And then when you look over here, a lot of stuff coming out economically, okay? Tuesday, final manufacturing PMI, ISM manufacturing PMI, ISM manufacturing prices, construction spending. Is that going to be up or down? Wednesday, JOLTS job openings, factory orders month over month. Beige book, you might get a little movement on that one at 2 p.m. We'll see. Thursday is going to be a big day. You're going to have ADP, non-farm employment change, unemployment claims. All right, we're going to see if we're still weak or not. And then final services PMI, ISM services PMI, crude oil inventories. And then Friday will be the big day because you'll have average hourly earnings, non-farm employment change, but there's the unemployment rate. Like I said, they're expecting to go down. So we'll see if that is the case or not. So it's going to be a big, fun, exciting week. Please hit that like, subscribe button on your way out. Really appreciate you guys watching. As always, hope you had a great Labor Day weekend. We did. Feel free to sign up for the membership. That's everything you get with it right there. You definitely get your money's worth unless than a McDonald's combo. And I will see you guys tomorrow for another fun one.